Hello traders, James Stanley with StoneX and Forex.com. Gold hit another fresh all-time high this week. It's a whopping 91% away from the low last year, at least if we take the low last year up to this week's high. 91% run in gold, just an amazing stretch. Yet, I still see retail traders trying to fade this move and get all bearish on gold, and that's not embracing the fact that the trend is your friend. Now, that said, it is overbought from a number of vantage points, and that makes dealing with it or working with it a lot more difficult. But like I've been saying for much of the past almost 2 years, there is very little that would make me want to get bearish on gold right now. If anything, if I do expect a pullback or if I am looking for softness or weakness, I'm simply going to try to wait, look for a pullback to support, see if that support could cauterize, and then look for some bullish trend continuation. In this video, though, I wanted to address the 3 things that I think are pushing gold and what could ultimately derail the trend, or let's say pause the trend and maybe derail it. But I think just looking at the way this is priced in over the last year and a half, there's a lot that we could take away. And until there's some evidence of change, I think it's probably smartest to just go with the flow. So let's get to the chart, let's dice this up, and let's look at what might finally be able to derail that trend. So here I am looking at the weekly chart of gold, and again, I just want to accentuate, it's a 91% run from last year's low to this week's high. That is an amazing move, and if you think about it, it was that 2K level that had provided resistance in gold for like 3.5 years until ultimately it came in as support last year, and then, well, we never looked back. But I think it's from that move, from that run, that we could deduce a couple of the important things that are doing the driving here. And then from that, we can deduce what might be able to stop it or pause it. So if we go back to last year, there were just 2 days when gold traded below the 2K an ounce level. 2K was like resistance from August of 2020, which again, there's something we can deduce there that I'll get to a little bit later. But that 2K level was resistance for like 3.5 years. It started to show up as support in early 2024. There was just 2 days where it got below that level. And I think, again, that's telling. February 13th, the day that it dropped below 2K, was a US CPI print. That US CPI print came out below or above expected. Brought on questions as to whether or not the Fed was going to be able to cut rates. The Fed had been telling us they wanted to cut rates even when inflation was still high and they were hiking rates. They were insinuating, well, we're going to hike until we get inflation down, and then we're going to bring rates back down to a neutral level. Well, as we came to 2024 and inflation remained high, that seemed a more and more distant prospect. And that February 13th day is important because that US CPI print above expected really brought question as to whether or not the Fed would be able to cut rates in 2024. See that drop below 2K in gold. Interestingly, if you look at SPX, again, same deal. February 13th of last year, US CPI print. It's right in there. You'll notice that we had this gap down, and we even had some continued sell-off in that session. And we closed red on the day with some unfilled gap. Now, the next day, we popped higher, and then essentially just went right back into the rally. This is just, again, another clear illustration of where trends are dominant. And that bullish trend took over, continued to take over, and has continued to take over. But again, February 13th, February 14th, that interplay is important because if we look at gold, that was the 2 days last year where it closed below that 2K an ounce level. And there's the CPI print, there's the day after. It was what happened the day after on February 14th that I think was so telling for gold, USD, SPX, everything. Austin Goolsbee, the Chicago Fed president, had a comment in a media interview, and he was straight up asked, like, how are you planning to cut rates when inflation's remaining high? And he said, let's not get all flipped out about one inflation report. As a widely watched member of the Fed, seemingly dismissing data that didn't go the way they wanted it to go. And instead, accentuating on the fact that they could still cut later in the year, even with inflation remaining high. Gold rallied above 2K the day after, started to jump, and never really looked back. And then later in the year, inflation softened, the Fed was able to cut, and you can see where gold enjoyed that run quite well. Eventually, It found this high in late October. Again, we'll get to this in a moment, but it found this high in late October, just inside of the 2,800 level. That's like a 40% run in just, 8 months? On the back of that dovish Fed. Now, it's not just a dovish Fed that pushes gold. It's a dovish Fed with inflation remaining high. Gold loves lower real rates, and the reason for that is opportunity cost. If real rates are going higher, there's an opportunity cost for that capital. Gold is a non-yielding investment. But if you could right now get 7% on 30-year treasuries, and you've ridden this run in gold for 20 or 30%, now there's motive to take profit off the table, put it into treasuries, clip those coupons, and laugh all the way to the bank. But when the Fed is cutting rates and inflation is going up, and inflation now from the 2% target is going up to 3%, well, those longer-term rates of return become more of a shackle than anything. And there's less incentive to remain invested in those yield-bearing assets. And gold loves lower real rates. And as the Fed cut into a high inflation backdrop, you can see that playing out very well. That 40% run that we had in gold all the way until it hit this high in October, just a couple weeks or a week ahead of the election. As we came into 2025, inflation had flared again. The rate cuts from the Fed, well, it wasn't a good thing for inflation. Inflation started to go back up. Now, earlier in the year, the Fed said that it was the inflationary potential of tariffs that was keeping them from wanting to cut. But, the reality is if you look at the data, it looks like CPI responded to those rate cuts and then gave the Fed reason to pause or take a step back. It didn't stop them from forecasting rate cuts in 25, though, even with that inflation going higher. And in the Fed's dot plot matrix, they were still forecasting that they were going to cut rates this year. And in March, April, we started to get data that showed, well, hey, maybe the U.S. economy might be going into recession. You can see where gold enjoyed that quite a bit because we still had high inflation, possibility of lower rates from the Fed, all the way until 3,500 came into play. Now, 3,500 served a very similar purpose as 2K had back in August of 2020. It's one of those major rounded psychological levels that invariably can shift sentiment. And like I said, I wanted to hit 3 things that could derail the move. And I think to do that, we have to first settle on what drives the move. And ultimately, the most important thing to drive any price move is supply and demand. Now, you can go to the headlines to try to make the link, well, what's spurring supply and demand? And that then becomes a more muddy topic. But at the core of it, any market-based environment is going to be driven by supply and demand, buyers and sellers. And if anybody willing, able, and wanting to be long already is, it doesn't matter how good the news is. Price can go down. And then the very act of price coming down, even in light of good news, that could compel others that are holding long to close. That's when you could get those sell-offs, even in a positive news environment, often indicative of an upcoming reversal. And I think that's what 3,500 was. But the thing is, the response to that 3,500 resistance was buyers are showing up at support from prior resistance. And, very similar. We had this resistance at 2,800. Buyers showed up after a very brief, moderate pullback. So over the last year and a half, as we've had this bullish run in gold, 91%, there's just been 2 pauses. And they were both bull pennant formations. Now, we know what that one was kicked off by. What about the most recent one? Well, the most recent one, you'll notice it was right here, Friday, August 22nd. That was a speech from Jerome Powell at Jackson Hole. That's when he all of a sudden sounded like he was ready to cut rates. Gold goes parabolic. It hasn't really stopped. It's the same thing. We have well above target inflation via PCE, CPI. I mean, anywhere you look, even in the Fed's forecast, they're expecting PCE to finish the year at 3.1%. Doesn't matter. They're still cutting rates. That's lower real rates. So if you think of gold just mathematically, gold in terms of USD, if USD is getting weaker or being debased by that higher inflation with those lower rates, those lower real rates, well, then the value as a function of the whole goes up, which is what we're seeing. It's just math. Now, it becomes perhaps even more interesting when we look at the constituency of the USD. The USD is a basket of currencies, 57.6% of which is the euro. So if we are seeing debasement across currencies, with the European Central Bank accepting higher inflation with lower rates, and Japan as well. Well, then we can further draw that mathematical function out to gold over 57.6% euro, 13.6% yen, etc. It's essentially a new paradigm. This is essentially a manifestation of Western capitalism. And I don't think we're in a place now where we're all of a sudden going to see prudence and austerity and balanced government budgets. So, as such, I see no reason to look for a reversal at this point. But supply and demand can get ahead of itself. And as we get these rallies up to these fresh highs, it's an area where it may actually start to find some pause. I don't think that's reason to look for a reversal, however. I think that's reason to try to be patient and look for a pullback to support. Let that balance come back in, and then maybe we could get a more attractive fill. But I said there was 3 things that I was going to touch on in this video. There's one more, and I think this is the elephant in the room right now. So if we go back in gold to that 2020 episode, and you think back to the pandemic, Jerome Powell had this comment in May of 2020 when he said, it was in a 60 Minutes interview, there's nothing that we can't do with the liquidity programs available to us. And that comment really seemed to take hold in markets. Stocks just took off, were taking off, but took off even more after that, to the point where we had these fresh all-time highs in stocks, even as the global economy is shut down. And you can see where that showed real well in gold as we had that first ever test of the 2K handle. But it suddenly stopped in August of 2020. And Q4 2020, the Fed is still pedal to the floor with accommodation. Didn't matter. Gold was now range bound with 2K as resistance. Opportunity cost came in. Now, if we go back to this August 2020 and we look at Bitcoin, Bitcoin was struggling to get back above the 2K announced level. 12K announced level, excuse me. Right in here. And as gold ranged for 3.5 years, Bitcoin came to life in a very big way. It's almost like the relief valve for those negative real rates, that expectation of higher inflation with low rates, with 0 rates in the US, was pushed from gold and into Bitcoin. Now, that's an interesting episode. We had 3.5 years of range in gold as Bitcoin comes back to life, sits in ATH, fresh ATH, 69K, depending on the price feed, but, massive run from the 12K. It was struggling to get above when gold first hit 2. It's the more recent episodes that I think are of interest, and that's what is of value for us right now. So, again, gold paused from this last week of October into early 2025 trade. And then it did it again from April into Jackson Hole. Again, it's almost like the gold bullish flows in that overbought market decided to suddenly go into something else. Now, look at Bitcoin over that same period of time. Again, we're talking last week of October into 2025. Last week of October shows right here. Bitcoin struggling to break out and actually print through that fresh ATH. As gold pulls back, goes into that bull pennant, Bitcoin comes back to life in a very big way. Finally, it's 100K. And then again, as April 21st of this year into August. Well, let's look at what was happening in Bitcoin at that time. Bitcoin, again, breaks out. Bulls get back in charge. April 21st, when gold starts to pull back. So I think if you are looking for a pullback in gold, probably one of the best things you could follow is looking for a bullish run and a fresh ATH in Bitcoin, which we're not at right now. Gold's rallying, Bitcoin's pulling back. But as far as the main reason, the big picture as to what's driving this, bloating government budgets, passive, dovish central banks, even with inflation remaining high, I don't think we're at an endpoint yet. Which is one of the reasons I'm not looking to get bearish on gold, and probably not even looking to get bearish on Bitcoin. If anything, waiting to see if some support develops, and then looking to get on the side of that long-term, big picture, major trend. Now, what could ultimately derail this? Inflation getting out of hand. Another repeat scenario of what happened in 2022. And you can see where that did not show friendly in Bitcoin, even though maybe a little less imposing in gold. But it was as the Fed had to They had no choice but to address inflation, that we started to see that flow shift. But I don't think that we're there yet. I don't think that's nearby either. As we start to get sign that it might be nearby, that's when I think we might get something that turns into like a legitimate reversal in both gold and Bitcoin. Until then, I think the trend is my friend, and I'm going to look for pullbacks, evidence of support, bullish continuation, and that's in gold and Bitcoin. But that's what I have for this video. Thank you for your time, and as always, happy trading, ladies and gentlemen.